the realtor is the lifeblood of the mortgage business.
Yes.
No matter how you slice it, that is the career in the mortgage business. The refinances are almost like bonuses.
Yep.
You cannot control the economy and interest rates. Nobody can. But what I can control is who's getting in front of the client, and that's the realtor.
Yeah.
And a realtor referral is more powerful oftentimes than their accountant, than their parent, than their financial advisor.
Oh, yeah.
Because they're at the open house, the realtor needs a pre-approval on the spot, and who are they going to call? They're going to call their mortgage.
This is why you and I work together.
Yep, exactly.
So you mean on your business cards, it didn't say like "We Heart Referrals"?
Right,
you would just like hand that out to people while you're playing flag football?
Might take more than that.
Right. Like, maybe I should get to know them.
Exactly.
Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk.
This episode is brought to you by Property Management Redefined. PMR is not just managing properties, they're creating partnerships that build long-term success for property owners. John and his team can be reached at manage@gopmr.com or by phone 267-753-6005. Tim,
Yes, Sean.
who's a good client for PMR?
Property Management Redefined is looking for property owners who value three things: accountability, reliability, and a results-driven approach. They want to maximize returns, but still provide client and tenant satisfaction.
There's a lot of property managers out there.
Yes, there are.
What does PMR do really well?
Biggest thing is they're seamless and they're worry-free. So with that approach in mind, it allows the property owner to put their trust in PMR and know that the results will be there. The other thing I think a property owner is really going to value because they do it so well is that they have a local expert team, boots on the ground, managing your properties and your tenants' expectations every day so that you feel good about your investments.
We have millions of listeners out there.
Tens of millions.
If they want more information, how do they find PMR?
Right here, guys. Reach out to John Sachs and his team at Property Management Redefined. They'll take good care of you. Hey, everyone. Welcome to another episode of Bricks and Risk. I'm Tim Garrity.
And I'm Sean Mooney.
Sean, we have another amazing local guest, mortgage expert, Rob Wishnick, Senior Vice President of Mortgage Lending at Guaranteed Rate. How you doing today, Rob?
Great.
Welcome on in.
Thanks for being here.
Over here.
So some background on Rob. He's a 22-year mortgage expert and a Scotsman Guide top 500 loan originator in the U.S. At the core of his business are two key tenets: trust and transparency. He takes a patient approach to making sure his customers are comfortable and confident in their home financing decisions, setting them up for ultimate success. He's got a BS in finance from Penn State University.
Go Nits.
He's got an MBA in accounting from Temple University.
Go Owls.
Married with two kids.
Cherry and white.
Loves baseball, baseball cards, and watching the city of Philadelphia evolve into a world-class city. So, why baseball cards? Where does that passion come from?
Yeah, it was my first job. It was my first. It started as a hobby. Like,
What age?
Like a lot of kids. I started collecting at 6 years old, 7 years old. I mean, some of my earliest memories and flipping cards and.
So my son is,
Oh, Brendan's into it?
he's 6. We go wildly into it. Like,
Really?
It's a different world today
Yeah.
versus what it was when we were kids. I mean,
But
it is, yeah.
It is. There is that differentness out there, but there's a store. I live in Ambler. There's like this old like.
They got card shop?
Dugout Sports or what is?
It's
Knuckleball.
not.
Knuckleball.
No,
Okay.
no, that's over in Horsham.
Okay.
That one. But there's one. It's not even a card store, but this guy John from Jackets and Things.
What's up, John? Shout out.
He's a baseball card guy. So they do like like some apparel and some printing and some different things. And he has like cards.
Oh.
And so we're like walking distance to this.
Oh. Do you go down and check it out?
Oh yeah. Like he'll like cash out his piggy bank, get like $10. How many cards? He's cutting deals with John. Like, oh, if I give you 10, can you give me these 2? And throw a wrapper on. So like at his age 6, and now his little brother who's
yeah, man.
oh no, wait, I'm totally off.
Yeah, I was like, your son's what, 8?
5, 8, and 11. Yeah, 8.
See, I even know the age of his son before he does.
Yeah, 5 and 8.
All right, so you got started at 6.
So I'm the grandson of antique dealers on my father's side. And so there's always been like a collectible bug in me. And my father would set up a booth at flea markets and sell random crap
You
around
guys
the house.
actually like were setting up and selling cards and trading
And
cards?
I started selling cards at the flea market. And then
Nice.
one day there was somebody at a flea market that had binders of 1950s and 60s cards, like Mantle, Maze, like big cards. And my dad was like, I want them all. Because that was his childhood, right?
Yeah.
It's all about bringing back your childhood. That's the
Absolutely.
hobby, right?
Yeah.
And it's, and when you get older, it's like you want to buy your childhood back, right? So
Yep.
you want to get everything that you did when you were a kid. So he bought these 2 binders, and he got into it as much as me, and we started a little business together. And on the weekends, that was our bonding. We would go to shows, we would set up at shows,
cool,
start selling at shows. My first job was working at a comic book and baseball card store. And then, like most people, you go to college, you forget about it.
Yeah.
Got rid of it all. And then, like 15 years ago, I got the bug a little bit again. And just got back into it, but it's completely different. There's a lot of aspects of it that are modern day gambling, right?
Yeah.
yeah.
Well,
It
attack
is.
and, being able to track things.
It's
and
expensive. It's about the chasing certain cards, whereas when we were kids, it was just like, hey, you want your favorite player on a card.
what their
It's-
rookie card or like their, the one with the hologram.
Now there's thousands of one player's rookie cards, and there's like lottery cards that you're trying to hit, and the packs are expensive, and it's totally different, but it's fun, and it's
Have you seen the show on Netflix? It's the
King of Cards.
Yeah,
or not King of Cards.
It's like a local
the
dude,
Ken
right?
Golden. Yeah.
Ken Golden.
Yeah, yeah, yeah.
Dude,
I haven't seen it. Is it good?
My kids watch it like over and over and over. But he's like buying like, hey, they've got a Pele jersey down in Florida. This guy wants to talk, and he comes with like a trunk of cash, like millions of dollars.
Whoa.
Oh yeah, and he goes down there,
Yep, yep.
and so like that's it. The other one was, have you ever seen the app, the Colex app?
Yes. Yep, yep.
So that's one of mine. Sure.
Wow, you're all over this just like he is.
Yeah, I don't know.
Probably even more.
Well, the kids bring you into it. Like
Is that how we paid for the hat today?
Yeah.
You traded a good
Yeah.
card up?
Yeah,
You're like, that's how I got it.
jackets and things.
Dude, that's a cool story.
I love it.
I like the bond with your dad. Your grandparents are connected to that. Obviously, Sean, his kids are doing it now too. So jumping into some of like the business stuff. So prior to being an SVP at Guaranteed Rate, you were with a smaller local mortgage company. So I'm going to harken back to my mortgage days a little bit. Was it a mortgage broker? Was it a correspondent lender? Or was it like a lender servicer? Like what type of mortgage company was it?
Correspondent lenders.
Okay.
Mortgage banker. So.
And explain what correspondent lender is to people.
Yeah.
That's not
So-
something everyone hears every
Correct, exactly. Now we're getting boring here.
Yeah, right.
So mortgage broker is, everybody calls what we do mortgage broker, right? If we're not a bank or a credit
like a
union,
general
everybody just
term
calls
for your
exactly,
position.
Exactly. So a broker really is there. It sounds exactly what it is. They're taking your file and they're behind the scenes. They're looking at their various investors that they shop loans to come up with the best terms. A mortgage banker, we're doing the same thing. We have investors behind the scenes. Our investors are lenders that we're going to ultimately maybe sell that loan to. We may keep the loan on our books. We may sell it. It just depends what bucket it sort of falls into. But we're underwriting the file. We are sending our money to the closing table.
Yep.
So it's a little more controlling the process.
You're funding it.
We're funding the loan at closing. And then after closing, we determine if it's going to stay on our books or we're going to send it to somebody else to collect your monthly payments. But ultimately, it just lets us control the process, in-house underwriting, as opposed to having to rely on that ultimate lender or investor to come up with the money at closing, to underwrite the file, things like that. So
It's very similar to you because you're an insurance broker. So it's just like the mortgage broker where they're not going to service it. So you're not in the servicing business as much as you're into the placing it with different carriers.
Trudy would argue that we do the servicing.
Right.
But very similar in that, like, there's a generic term like, oh, you're an insurance agent, which covers everybody. Like, it's a generic term, right? Mortgage broker, where we are actually a broker, where it is different. We're not, one carrier, one company.
What do they call that term again in your world?
An exclusive, so if you're captive or exclusive agent.
That's what it is.
Like one, you're tied to one company, and whatever direction they want to go, you're kind of following.
All right, so this place that you started at, what was the name of it?
East Coast Mortgage and Financial Services.
Yeah, I do remember them.
Yeah.
So what brought you to that company to like kind of cut your teeth in the mortgage business?
Yeah, so it was 2003. I was in a career that I sort of knew was a dead-end career. The housing market was booming.
Yep.
And
that's right when I got it.
And I knew you needed a mortgage to buy a house. That was my entire knowledge of the mortgage business. And a woman I grew up with, I went to middle school, high school with, her father owned a mortgage company, East Coast Mortgage and Financial, and
Rob, you'd be a great fit.
needed some qualified people just to literally process files. Like they were so busy. It was such a busy time. They just needed qualified bodies to help get the loan from start to closing.
Papers, make sure we dot I's and cross T's.
And so I started processing with the intent that I would be growing a business. And I'm more cautious, and I like to make sure I understand things before I dive all in. So I learned the business, and it really is the best way to learn the business, to get other people's loans to the closing.
Sure.
And you learn what underwriters like to see, what they don't, what's important, why guidelines exist, right? Like why they're asking for certain things. And it really just helped me learn the business so that I was comfortable enough to then start going out on my own and selling full-time. So
how long did you do processing before you started becoming more like an originator or loan officer?
Yeah, so my full-time job was processing, and my own time was originating. So I took the slow and steady path because, again, until I'm really comfortable with something, I don't want to be selling the unknown and the uncertain. So it was about 5 years where I was before I became full-time sales, and I gave up the processing salary.
Gotcha.
So, but it was always a hybrid role, but from 9 to 5 or whatever the hours needed to be, I was processing, and then in my own time I was originating. So,
what did you hate about accounting?
Yeah,
that's
everything.
true. That was
everything.
That was your MBA was
MBA.
accounting.
So-
Wow.
So you went to college, you got the accounting, you're like, I need
paid
more
all
of
that money for
this.
school, you went back, you're like, maybe I'll spend more money and throw it at
I
this.
felt it was my weakest aspect of business.
Interesting.
And so I did it never with the intention to become an accountant. My father was an accountant, as him and his father had an accounting practice.
Oh, wow.
My father left because it just wasn't for him. I took one accounting course in college, hated it, and knew it wasn't going to be my future, but I felt it was an important piece of business to understand, and that, okay, if I can concentrate a little bit more on that, get that understanding, you really get a sense of how businesses work and the dollars and cents of businesses. So that's why. But it was very immediate that I knew I was never going to be.
It feels like what brought you some joy in life was trading cards on the weekends, dealing with people, making deals, and it feels like you were doing accounting. You're like, well, that's not really what I'm into. And mortgage, and then
Farthest thing from
you got into
cards.
mortgage, and that was kind of more like the things you enjoyed.
I definitely had an entrepreneurial bug, and sales is entrepreneurial. I wake up every day and I don't get paid anything unless I go out and find business, right? So it's even though we have to be W-2 employees, we can't be independent contractors. That was one of the changes after the mortgage meltdown.
Yep.
We have to be an employee of a lender. So I'm a W-2 employee, but I get $0 in base salary. So it's really so it's that entrepreneurial spirit. Like every day, and I love it. And that's just, it's what I've always been. I like to, do my own thing. I like to find business my own way and just run a business the way I think it should be run. So it's fun. That's the exciting part. The growth is the
How much
exciting.
freedom within do you have to like operate?
At guaranteed rate.
Yeah, because
Yeah.
Rob's got a team too.
Yeah. So it's, I operate under the auspices of this company and the way they want me to originate, but other than that, I have total freedom. They're not calling me, asking me where I'm at, and I have total autonomy.
I meant more like from just the unknown of like, are they requiring you to do events or do certain things their way, or it's just like, Rob, what do you think works, and you're able to do that?
We have a lot. The executive team in our company, they've spent a lot of time and money developing plans on things that you can do to how do you become a better originator, how do you grow your business, and we have tons of resources to help that. I mean, when I got to Guaranteed Rate 10 years ago, I was running a fraction of the business, and it was just watching all of these salespeople that were doing as much in a month that I was doing in a year, and I was like, are these people smarter than me? Am I really just, or did they just figure out a system?
Yeah.
And you learn really quickly. It's not about brains. It's about figuring out. I mean, there's certain aspects that you want to have a brain on your head, but
that helps.
It's really figuring out a system to be able to scale, right, and to make sure that you're doing the right thing on every deal, but then figuring out how to grow. And you realize it's not challenge. It's not rocket science. You just have to be able to sort of like, bob and weave in the right direction and make
have
sure
the
you're
team
always...
and put the pieces in the right position to allow you to scale.
Yep.
All right, so here's like a follow-up question. So when you start at East Coast, you're doing the processing, you're kind of like part-timing with the LO, loan officer position. How were you getting business? Were you networking? Were you paying for leads? Like, what kind of things were you doing when you first got started to try and drum up business?
So for me, again, that was my first real sales job. It was, I still never like to ask for business. It's very hard. So for me, it was easy to just ingrain myself in a lot of activities. I was in my late 20s, early 30s. I was still playing lots of sports, and we didn't have kids at the time, so like I had plenty of time for weekend activities, and everything just became a hobby. Hobbies became, oh well, of course I'm going to use Rob. I like Rob. I want to work with him in business. I'm going to buy a home eventually, and yeah, of course I'm going to use Rob. So it started with my sphere, and then slowly started expanding my referral network, my business network, lots of networking groups, lots of networking events, and it really was it became omnipresent, right? Like the business was just a piece of life, and eventually just started crossing over more. And I tried really, I knew, working with a strong realtor referral base was important, but it wasn't until I really started to ramp up that it was just punching me in the face. Like, the realtor is the lifeblood of the mortgage business.
Yes.
No matter how you slice it, that is the career in the mortgage business. The refinances are almost like bonuses.
Yep.
You cannot control the economy and interest rates. Nobody can. But what I can control is who's getting in front of the client, and that's the realtor.
Yeah.
And a realtor referral is more powerful oftentimes than their accountant, than their parent, than their financial advisor.
Oh, yeah.
Because they're at the open house, the realtor needs a pre-approval on the spot, and who are they going to call? They're going to call their mortgage.
This is why you and I work together.
Yep,
So you mean on your business cards, it didn't say like "We Heart Referrals"? And you would just like hand that out to people while you're playing flag football?
Might take more than that.
Right. Like, maybe I should get to know them.
Exactly.
All right, so we've known each other for a while. Full disclosure. So I personally consider you a mortgage expert, and I've always valued your knowledge of the industry. To me, I can always ask you a question, especially when things are changing, things are shifting. Like, we had lunch not that long ago over in Chestnut Hill, and I was like asking you, where do you think things are going with like rates and why? And you were really digging deep. Now, I did mortgages too, so I have like a baseline of understanding of how mortgage rates work and, why they go up and why they go down. But you just being an expert and me being able to ping you anytime I want and just say, hey, what do you think of this, to me is highly valuable. But one thing I want you to touch upon with all your knowledge is like, what are some of the most common like mortgage myths, if you want to call them, that are out there that you hear on a regular basis?
Sure. Number one that comes to mind is the 20% down payment.
Yeah. Oh,
right?
man.
So everybody's parents want them to put 20% down because it avoids the evil PMI, private mortgage
dreaded
insurance.
mortgage insurance.
Exactly. When our parents and I'm 48, so when my parents were buying a home, they didn't have options to put less than 20%. The only option was the government insured FHA loan. Well, mortgage lending had to catch up when the boom, even before in the 80s, 90s, like lending had to catch up with the modern borrower. And when the 2000s real estate boom happened, there were more products that were coming out every single day that offered low down payments. The mortgage insurance was even more expensive than it is today. So it's just continuing to trend in the direction to get to a 20% down payment with the way prices are going.
Yeah.
And just people getting married later in life or starting families later in life or whatever it is, it's harder to come up with that 20% down payment, right? And so this PMI has this horrible stigma around it that like it's almost like you're not gonna be able to afford it. And even some of the online sites. So PMI is based on two factors mainly: your down payment percentage and your credit scores.
Right.
Right. There's a couple other nuances, but those are the two main ones. And if you have excellent credit, that PMI, I mean, you might see online it's going to cost you several $100s because these online sites have no idea what your credit score is.
Right.
So it's just making a random assumption. And we've had $700,000 homes, and the PMI is like $60 a month. It's just not. It's not cost prohibitive, and it's modern lending, right? It's between down payment, closing costs, is a lot of money. So that's myth number one, is definitely the 20%.
I think you should do a commercial and like create a character like a PMI and make it like this evil devil.
He can do your wardrobe.
Great idea.
Yeah.
Great idea.
And then by the end of
We're wearing this today. You're like,
by the end of the 30-second skit, it becomes like, oh, PMI's our friend. He's not that bad of a guy.
Yeah.
do you know what? All right, so it's funny, so not to cut into the myth part, but like saying that down payment example, I have said this to a lot of buyer clients because, again, me having some mortgage background, and when someone's asking me a mortgage question, like as we're getting started, they'll say, I would say, how much are you thinking of putting down? Is like a real basic question to ask. I'm thinking of putting down 10% or 20% or 50%. I mean, it just depends who you're talking to. And for someone that says, I'm thinking about putting down 20%, that common myth, I would say, why are you thinking of putting down 20%? And more times than not is, I don't want mortgage insurance, plus I want to get my payment down to a lower spot. So, and I've even done just basic calculations showing like the principal and interest on 20% versus the principal interest on 10% with the PMI. And I'm like, look, it's a difference, let's say, of like $300 or whatever it is. So I say, that's $3,600 a year, and you're putting down, what, 50 grand or whatever. I'm like, how long does it take for you to get that back? Would you rather have that 50 grand sitting in your house, which is illiquid, you can't pull it out unless you do a line of credit and spend more money and more interest? Or would you rather keep that 50 grand in your bank account, pay the extra $300, $350 a month, and then if you want to do your kitchen next year, you can with cash. If you want to do the 2 bathrooms in your house and hardwood floors, you can with cash. So I would constantly say that to people, to just say, look, it may be the most important thing to you, principal, to not pay mortgage insurance and to get your mortgage payment as low as it can be, because principal, financially, budget wise, however you look at it, that's what you want. Like, that's going to make you sleep better at night. But for the people who are like, I just thought I had to do that, or it made sense to do that because I'm trying to keep my payment below here, is to give them the other side.
It was a very easy conversation when rates were in the 2s and 3s,
Right.
because the markets
Very easy
and the markets were outperforming. You could have invested in anything and gotten 5% basically. Like there was no risk. So when money was really cheap, it was a very easy conversation. As rates get to 6 and 7, in the 6s and 7s, and your CDs are paying 4% and 5%, now it's not as easy a conversation, right? And there's more risk in the market now. So, not now, there's always risk in the market, but it's a different conversation. But on every call, take out the person, the human component of selling and the scenario. The most important number, there's two important numbers that I want to hear from the client on every single call. And it's what's your monthly payment comfort level and how much money do you have? I'm not even saying just the down payment. How much money do you have, period, that you are willing to part with?
Everything.
And I'm going to figure out then how to best use that money, and we're going to show you how to structure that. And once we have those two numbers, it gives me everything I need to know to run with, to tell them what house price they should be looking at, how we're going to structure that loan, and what's going to keep them in their comfort level. So paramount to me, I want to make sure people are sleeping at night. I don't, just modern lending has also, if you have excellent credit and you are not swimming in consumer debt, modern lending has made it so that we can qualify you for significantly more than you are going to want to spend. And that's just modern lending, and that's not my goal, is to max people out. It's keeping them comfortable. So.
Yep.
Some people would be surprised with what they qualify for.
Oh, yeah. Oh, yeah. Yep. Mm-hmm.
Totally true. You're like, okay, maybe I'll look at that.
Just double that number, 500, just go to $1 million.
Yeah. Hey, everyone. This is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth. So if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the B&R word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show. I feel like you ask, there's two tenets of my business. Just like there's two questions you ask when you have, simplifying things in the mortgage world. It makes the conversation so much easier because it's just such a technical topic. Like you said before you even started, look, this is dry, mortgages are boring. Even when we started this podcast, we was like, who the hell wants to hear about insurance? This is a real estate and insurance podcast.
Come to find that insurance is one of the sexiest topics that we've had.
You're
on
signing
this
way
podcast.
more autographs than I am. So just on that sheer fact alone, I would say insurance is way more popular than real estate. The last time you said, oh, you want me to sign that magazine for you? And they just started going like this. And you were like, whoa. And I was like, wow, you are popular.
It's like Happy Gilmore.
Yeah, just like Happy Gilmore. Exactly. But knowing the industry inside and out, how has that always helped you when you take those calls? Knowing, like you said, how do I best use your money? You have to know the programs and where to place it and why. Why has that always been an avenue you've been, good at?
Yeah, that's so again, that comes back to my just overall conservativeness. I want to be comfortable with what I'm selling. I want to be knowledgeable what I'm selling. I don't want to just, I feel like there's two main types of salespeople. There's ones that lead with trust, and there's ones that just have that natural gift of gab. Yep. And for me, it's that trust. I don't consider myself a great salesperson. I consider myself a trusted person, and so if you can't trust me, that's devastating to me. That's it's not personal, it's never personal, but that's hurting my feelings. I need to be trusted, or we should not be working together.
Yeah.
Because you find out really fast, just in any career. Not everybody is equal at their jobs. There's better people than others, right? So knowing the guidelines means that we're getting to the closing table. It's not a matter of if we're getting to the closing table, it's that we are getting to the closing table, and maybe we need a couple extra documents because something got uncovered in a bank statement or whatever. But the bottom line is, when I pre-approve somebody, it's coming with as high a level of certainty as we can that this was done right, that we reviewed everything we needed to. And our realtors appreciate that, right? Yeah. Our reputation, then, we win deals based on our reputation. The listing agent's more apt to take my deal versus an online lender that they never took, that they've never heard of, or just a random online lender that they have even heard of, the largest ones that do a ton of marketing. because they know the quality of our work. And so there's a lot of guideline knowledge. We're always reviewing changes in the industry. They're always coming. There's lenders that come in. There's programs that come in. There's programs that escape, that leave. So it's just knowing the guidelines. You know, there's definitely a pride in that like really knowledge is the key to the business. And then it just, everything else falls in place. So.
That's awesome.
Yeah.
A view from 30,000 feet, Rob. There's this credit card debt that's like ballooning.
That they're just slowly starting to talk about in the media.
Like what's the impact of that on the housing market and the mortgage?
Yeah, that's another great myth, actually, that you bring that up. So a lot of people are...
See, that's why I'm trying to weave this in.
So that's... another myth. People are afraid, well, I have like a lot of credit card debt. I have a lot of student loan debt, right? And the truth of the matter is we don't care about the aggregate number. We don't care if you have $30,000 in credit cards. We care about what your monthly payment is, because one of the metrics
on those credit cards?
is what's called debt to income ratio. What are your monthly expenses that we're going to see on credit, the new housing payment divided by your monthly income we're qualifying you with. So you could have $30,000, or let's just even say $10,000 in credit card debt, and your minimum payment is $1,000, right? We're counting $1,000 against you, not $10,000 against you. So it's that is and some people are apprehensive to fill out an application until they've paid certain things off. And it's like, if we can get to them early enough to just say like, hey, like, maybe we don't want to use that money for that credit card, that $10,000. Look, I want you to get rid of that credit card debt for sure, because it's at a
18%.
rate, I'm sure.
Right.
But if you need every penny that you do to get into this house, $10,000 there might not be the best use of funds. So,
and it's no different than a lawyer or a doctor that have these humongous student loans, and maybe they're overpaying on them just to kind of like take them down. But maybe you're like, well, take a step back. You know, we don't necessarily need you to pay that amount. You can pay this, and we can still qualify you.
Yeah, you make good money as a doctor, let's say, or an MBA, but your student loan payment is only $500 a month, even though you owe $100,000. Let's say.
I'm trying to fit into their life. I don't want to interrupt their dreams, but if they're coming at me saying I want to buy a house, I'm going to come at it from the aspect of, here's what you need to do to get this house. Here's what you need to do to get this monthly payment here. Hey, maybe if you did pay off this car loan that you've got 12 payments left.
Yeah.
Your monthly expenses are going to come down, right? Because we're earmarking more money towards that, getting rid of that car, and now your housing payment could go up a little bit, maybe, right? So it's just playing with some numbers, you know, and that's.
You're a professional masseuse. You're massaging the numbers and putting it where it's got to go.
All right, so you're a family man living in a big city, Philadelphia, 6th largest city in the U.S. You grew up in the burbs, though, just like we did. What is it about raising your kids and living in the city that you love today?
Yeah, it's everything. I never thought I would live in the city. I grew up in the suburbs. I went to Penn State, so the middle of Pennsylvania.
Right.
Never thought I'd live in a city. I moved in for social life, and in my mid-20s, and I just never wanted to leave. It's everything I need is there. You can walk everywhere. You don't have to hop in a car to get everywhere. I can walk to my office if I want. The parks, the playgrounds, our school's a block away.
Yeah.
I just think it's a fun place to live. There's lots of activity, lots of action. The nightlife is fantastic, and it's just everything about it. Really, it's just I like the hustle and bustle. I don't need solitude and quiet and tons of space or anything like that.
Mooney and
sometimes it's nice. You know, sometimes it's nice and it's a breath of fresh air. But
on vacation.
I just, get
away.
That's right. So, you know, you figure out what, you know, where you do find your peaceful times, and but it's great. It's not for everybody. You know, most of our friends have chosen the route of moving from city to suburbs. We're one of the few that didn't. But it's just everything about it. I love city life. I think Philadelphia is a world-class city. It gets a lot of, you know, negative press for sure, and some deservedly so. There are things that absolutely could be better, but I think it is a world-class city.
Well, that's every city too, right? You go to New York and you could point out all the stuff that's wrong or doesn't work, but in the end.
There used to be a billboard back in the day that said, Philadelphia is not as bad as Philadelphians say it is. Because sometimes it's us bad-mouthing our own city, which I tend not to do, but my co-host here tends to love to do.
That's just me in general.
Yeah.
It's not like a Philadelphia thing. It's like I'm just negative about everything.
That's very true.
The Eagles keep winning the Super Bowl.
Yeah, hey.
Yeah.
Everything. That's all.
I do love the one where it was like the meme about like, well, what do we have to complain about now? Like,
Right. Nothing to complain about anymore.
Find something.
2 Super Bowls in whatever it was, 7 years. That's cool. All right, so what you love most about what you do is assisting people with their largest life purchase. But you took it a step further. You said, here's a more in-depth answer to your question. The pursuit of business growth. So what is it about growing your team? Why is that such a fun part of your job?
Yeah, because the loan process is monotonous, right? It's speaking to customers about the same thing over and over and over again. And there is some definite, we close on somebody that they're the first person in their family to ever buy a house. Like, that's amazing. That is so cool. And look, the mortgage process, unfortunately, has sort of become as close to a commodity in some, so the first question a lot of people ask is, what's your rate, right? What's your rate? And they don't recognize, well, that's not, you're just starting to look. You might not be buying for 6 months.
The rate's irrelevant.
It is irrelevant, and it's not the right first question to ask. So it's like, okay, well, the loans, we're gonna do great work on the loans. That's given, like that's automatic. It's not a question. So what else can I enjoy in this? And it's the fun of like figuring out how to take it to another level. So when I got to guaranteed rate, I was about a $12 million producer during the height of COVID, when there's lots of refinances, and we took it to almost $200 million.
Wow. Wow.
And the past few years has been over $100 million. So it's,
That's
because
fantastic.
there's no refinances. So the growth has been fun, and trying to figure out how to just evolve, because I'm getting older. The realtors that are at open houses, they're 25 to 35 years old.
Right.
Trying to relate with them is getting a little harder.
Isn't it funny?
But it's the word of mouth. We do good work. The realtors refer their friends. They tell us they should be working with us. So it's just keeping that going and evolving and growing. That's challenging, and I like being challenged. So
It reminds me of insurance.
It does?
You say it's monotonous. We can check that box.
Yeah.
But everything is, how much can you save me? And I'm like, well, that's important, but that's one piece of the puzzle that you have to look at. We actually had this conversation in our office the other day, and we have an online intake sheet where you fill out some information. And I came up with the idea that it's going to have like what's most important for you, like service.
Yeah. Tell me what you value.
Yeah.
That's a good one.
Well, here's why, is because I can get you into an insurance policy that's going to save you money and be cheap. But if you're not worried about getting a claim paid, right? If you're not worried about that, and you just want to pay,
You just want a
a
low
low premium, I got that for you.
Yeah,
I'll
no
put
problem.
you over here.
Don't put a claim in, because you're going to get screwed.
Right. If you want like an app and you want everything digital, and that's like your biggest concern, I have that for you over here. If you want like the best coverage with the best carrier, I have that for you over here. So it's kind of trying to figure out, it's more of a psychological thing, or kind of steering, finding out what's most important to them, and then kind of like maneuvering through that to find them,
the real estate, insurance, mortgage, I think they're all very similar sales.
Yep.
Right? There's some aspect of your service that you have to break through to the customer.
Yep.
Other than just being the low cost provider all the time, right?
Yep.
Because if it's only about that, it's then
We say you win by price, you lose by price.
Right.
Biggest struggle you put, delegation. So has that been a struggle for you, because you like kind of having your hands like in the dough, let's call it? Like, you don't want The best example, like pizza shop. I always say pizza shop. Like you could have 3 people making the pizzas and you're quality control. You're going around, okay, yep, looks good. Like cheese is perfect, sauce, nice work. Or you can be the guy or girl that, no, I need to roll this out. Are you the type to roll it out? Is that why it's been a little bit of a struggle?
Yes. Yeah, I very hands-on. It comes from the processing days. Just want to make sure, sometimes, when it's like just easier to do it yourself than to tell somebody else how to do something or to do it, it's then my natural response is just do it myself.
Yeah.
But then you can't grow, right? So you can only get to so much. So we just had a corporate trip to Miami, and they broke us up into groups, and they said, what does your perfect day look like? And my answer, like I had like my little next epiphany is like, well, my perfect day is actually when I'm here, because I'm delegating 90% of what I should be delegating when I'm home.
Yeah.
And I'm doing the 10% that needs my true attention.
Yeah,
like I put a great team together. Like I trust my team. Mark on my team
Mark Hirsch, shout out. What's up, man?
I mean, we
My
play
neighbor.
Little League together. This guy sees every email that comes
he's
into
the
my
best.
inbox. He sees the business. Like we just know how each other think. And I put the right team in place to delegate. And then I get home from the trip and I delegate 10%. I go right back to, so I'm like, you know what? I'm not going to do it this time. I'm going to start pushing that back. I'm going to get back to that 90% when I'm home. And it's almost like treat it like I'm away to my team. Treat like I'm away.
Good advice.
And I'm still here. I still see every email that comes in. And if there's one thing I'm a master at, it is email. I get my inbox down to 0 every day.
Me too.
All email across all
I'm a
email
psycho.
platforms, and that's my control, right? Because I knew I saw it, and I saw if the team responded to it, things like that. So I can still see what's going on and know exactly where files at and things like that. But I can be delegating more. So it's a process. I'm training my brain to do it, and I'm gonna stick to it. So that's been fun since I've been back. So yeah,
Awesome, man.
Yeah.
So tip for our audience, be ready to work and establish a great reputation. There are so many different ways to create a career. Become an expert, grind, and evolve. So the one thing I see in there that we had talked about in depth already is like become an expert. Evolving, you're talking about, okay, like, I was doing this, now I'm trying to do that. But the grinding aspect, why is grinding always worked for you? Like, why have you been a grinder?
Yeah. So for me, I am not the person that can have 10 jobs. There are some people that are just masters of making money, and they can have 10 businesses and delegate.
Yep.
Delegate enough.
I own a little bit of this.
Yeah.
This takes a little bit of my time. Like, they all make me money.
Yeah. And that's just, I just wouldn't be able to do it. Like, even the baseball cards, like I can't even call it a side hustle. It's therapy. It's not a side hustle. It doesn't make money. It's literally just fun for me to get my brain off of work, so it's, the grinding for me, I just know for me to make a living, I am going to have to work harder than everybody else, right? And there's no medals for working yourself to an early grave. That is not what I promote here, but you have to be able to be passionate about it. For me, like I had to give up when the business started growing. There was just less time in the day, right? Family, I have to spend time with family. I have to get things out. Like we have deadlines every single day that have to get done. There's people waiting on us to make offers, things like that. We don't want them waiting. And so like, what did I have to give up? I had to give up watching TV, right? And I love TV, but I had to get, something had to give. I just didn't have the time. So it's like now it's just in my brain, like, okay, am I gonna get this out off my desk at 10 o'clock at night after the kids are down? Or am I gonna just watch TV? And the answer is like, I find more enjoyment, just keep going, just keep getting the work done, keep it going. And you just have to be, I never like when people say you have to have a job doing what you love. You just have to be passionate about it, right? If you truly hate what you're doing, it's going to show in your work. You're going to be miserable every day. But you just have to be. It's not like you have nobody loves mortgages. Nobody comes in this world thinking they're going to be a mortgage broker or a banker. Like you fall into it. You fall into a career. There's aspects of entrepreneurialism.
Yeah.
There's aspects of finance, like stuff
many
that I've been trained.
business things.
So it wound up being a natural fit. I realized I was good at it. I realized I could comprehend the guidelines, and it was like, okay, like I get this. Like I'm passionate about it. Extremely passionate. I'm the president of my life, but like I'm passionate about it enough that I care enough that this is something I'm fine sinking my time into, and I think it's hard for people that like is starting out in a career trying to find what they love. When you try and look too hard for what you think you love, you're missing out on a whole lot of other things that maybe you're good at, and maybe there is a career in, right? So it's just you have to be passionate enough about it, but you've got to work hard. I mean, it's. You have to separate yourself from the bunch. And one thing I can do is work. I can work through it.
To be successful, there has to be a period where you are grinding.
You've been a little bit more like that. I'm less of that. So you've even said on past episodes, when you were first getting started in insurance, you're like, I'm like the first one there and the last one out.
Yeah.
Like that was how you rolled.
Yeah. Like I don't know. It's just, and I've always been that way. Like, it just.
It's interesting. Like I work very hard, but I don't look at it that way, which is also like a different perspective. I think I've always been a little bit more of like a strategic thinker. Like how do I work hard for certain things that I know will pay dividends later? It's probably why I was very into content creation early on, knowing that it would just turn into evergreen content and eventually like it would just get views or likes or shares or a phone call or an email. And that's the opposite side. But what I love about what you shared, Rob, was you're just giving people perspective. And like that is great advice. It's like, look, I can control the grinding. Like again, even from a strategic part, I can't really control when something is going to happen. I just got to sit around and wait and kind of hope for it. Whereas if you're grinding, like you guys had more, subscribed to like early on, it's like, no, it's just, if I'm working harder than most of my peers, the odds of me doing better in business, financially, volume, premium, whatever business you're in, like chances are you're going to be that much greater than them purely from the standpoint of like, look, I really like what I'm doing. I'm just going to bust my ass to do this all day, every day. And then eventually I will get to a point where maybe I can delegate a little bit more. So.
I think it goes back to what Rob said or touched on earlier was like, I'm not the smartest guy. I'm not the most connected guy. I'm not the best salesperson.
Yeah.
Right. So like if you take all of those off the table, like what are you left with? Well, I know if I work harder than those people, there's a chance that I can be successful. So maybe that's the way that I kind of got to the point where I am, is that didn't have this, I didn't have this, I didn't have this, but hey, I'm able to do this and control that. So maybe that's the path for me.
Your quote was great. So you will never get what you don't ask for. Was that said by someone? Is this just something that you've always kind of like said to yourself?
There's probably been evolutions of this,
Yeah.
That, and it wound up just being that. I'm sure I'm not the first person to think of that. But one of my first jobs was as a busboy at a local deli, and I remember I never got a raise, and then I found out that someone that they just hired as a busboy, a brand new busboy, was making more than me on day one.
Wow.
And I was like, well, that's not right. And I didn't know how to ask for it, right? I didn't, and this took a lot of gaining confidence, gaining the skills of how to talk to people, because, you can come off as argumentative when you're not happy and not getting, and I had to make the uncomfortable, hey, can I get a raise? As a 16-year-old kid.
What do you say?
Right. And as I've gone through various professions throughout my life, I've just recognized, whether it's a sale, whether it's a salary, whether it's a split in commission, if you never ask for it, you are never going to be given it. And you have to be your own advocate, always, always, always. And if you think you deserve it, or even if you don't think you deserve it, but you make the right case, right? And make the right case for what you think you deserve and why you deserve it. And it's because if you never ask, nobody's going to hand it to you.
I think it was Michael Scott said, You miss all the shots you don't take.
Was that him or was that Jordan?
No, it's Wayne Gretzky.
Oh, that's right. Wayne Gretzky.
Different version.
So
Yeah.
it's a similar concept,
love
right? It's, you just have to gain that confidence and that courage and be bold to ask a realtor, hey, let's go to lunch,
Yep.
right? Like, let's go to lunch. For me in the very beginning, I couldn't do it, right? I had to learn, I had to be confident in what I was selling enough to then go to do it.
Right.
So it's just, again, there are so many levels on, but it's salary or just when you think you want more in your career or whatever, like you have to be bold.
But keep in mind too that it's rare for someone to, hey, you deserve more. I'm going to give you more.
Yeah.
Right?
It doesn't work like that. No business works like that.
No.
Very rare, right?
Awesome conversation. So many nuggets in this one. So before we shut it down, why don't you tell our listeners and watchers more about where they can learn about you and everything you got going on?
Yeah. So website is rate.com/Rob W. That'll take you and it'll show you all my ways to my cell phone number, office number, which is basically one. And at Philly Mortgage is the Instagram, and
That's a good Instagram.
it is. That's a good one.
All right.
I got that across all platforms, and then most of the other ones I don't even log into. But
You didn't have to pay someone for that?
Yeah.
You didn't have to
I
like
don't know.
leapfrog, or that was like open and
I
you
was
got
an early adopter just to get the handle.
Love
Yeah,
it.
yeah.
Very smart.
It was like us with the website. I got the bricksandrisk.com website. Like,
As entrepreneurs, how
Yeah,
often do you
yeah.
go on those websites and just see if something's available?
oh yeah,
That's like
yeah.
a hobby.
Oh,
right?
yeah.
It's so much
Totally.
fun.
Yeah.
Awesome. Well, that's all we have for this one, folks. Thank you for tuning in again to another episode of Bricks and Risk. See you soon. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with one or two valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all BNR episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.